Welcome to the Crypto Podcast. You can find all our episodes on thecryptopodcast.org. We're also on BitChute and YouTube. You'll find the links in the podcast description. I'm also a podcasting coach because I got 4 other podcasts, 4 of them getting to the top 0.5%. You'll find everything on bio.link/podcaster. My guest today from LA in the USA, crypto strategist, fitness enthusiast, and also an author. Please welcome Corey Carbone. Did I pronounce it correctly?
Thank you for having me. That is perfect. You're doing great. Thank you very much, Roy. Pleasure to be on.
Well, thank you very much for coming on. So you might just obviously I've given a few bullet points, but you might let the listeners know a little bit more about you, Corey.
Absolutely. So I born and raised I was actually born in Florida, but raised in the Midwest in a little state called Lincoln, Nebraska. And, my whole life I was, an athletic kid. I got involved in the insurance and finance industry at a pretty young age. So there's not much to do in Nebraska, but play and watch football and also idolize Warren Buffett. And that's how I really got into the investment standpoint. He's kind of our success guy there. But I, from a very early age, working in the insurance industry, I actually worked for a company that he was a majority owner in called Torchmark Corporation. So I really dove into value investing. I really, just sunk my teeth into learning insurance and how policies work, especially index fund universal life policies, and kind of how to navigate that space. But eventually I followed my passion, which I got into the fitness industry. So I ran a string of Gold's gyms in Southern California. Obviously the pandemic really threw a wrench in everything here. All the gyms shut down, the whole world shut down. And that's when I decided that, I don't want to be, a slave to a location or what the government can say I can or cannot do. I know that sounds kind of anarchist, but I wanted more control of my own life. So I started doing policy reviews, unbiased policy reviews during the pandemic. And during that time, when I was explaining how these policies work to people, they just got very confused. They're like, well, my agent didn't explain it to me this way. You're explaining it to me a lot easier. Can I just give you money and you can invest it for me? And I was like, no, I can't take that. That's illegal. But then it got me thinking, because I was reading a book, ironically, by Warren Buffett. And I was like, maybe I could start my own investment fund. And so I used everything I learned from value investing, but Bitcoin really got my attention. And once it did, I dove down the rabbit hole. Long story short, we ended up starting, my partner and I started a crypto and Web3 based hedge fund. It is registered with the Securities and Exchange Commissions. It's, fully on board, licensed and everything. So, in this fund, we, trade crypto, we have long-term holdings, and we offer it to accredited investors. So after that, I ended up starting a coaching company, and the coaching company teaches people how to invest in crypto on their own, since the hedge fund is for kind of an exclusive group of investors. And what I just noticed during this whole time is you can teach strategies, you can teach education to a lot of people, but if they don't develop the mindset, if they don't have the consistent habits, and if they're not prepared to accept the success that comes with investing, a lot of times they'll end up self-sabotaging themselves and ruining all their gains, or cashing out early, or panicking when the market takes a dip, as it does in the crypto market. So, we teach mindset, we teach consistent habits. One of the requisites of our investing courses is to get your ass in the gym and get in shape, and also read and feed the body and mind positive information so you can be fully well-rounded in all aspects of it. So that's the Cliff Notes version of where I came from and how I got to where I am. And now I run the hedge fund full-time, do coaching business full-time. I was able to get rid of corporate America about 1.5 years ago and just completely dive into my business.
Yeah, brilliant. And I love the way that you're kind of encouraging the mindset, because a lot of people don't do that. And also, I suppose it's understanding wealth, because when you do wealth, well, I've seen a lot of people that when they actually make a lot of money, their mind isn't there for it, and they end up blowing it all, and then they're wondering what's going on with life. They start blaming everybody, and just I think when your health, just going to the gym and everything, when your body's in shape, your mind is acting a lot better.
Yeah, 100%. I mean, I'm in LA and you're, far away from us right now. And I got up at 3:30 this morning, spend the first 30 to 45 minutes reading, meditating, go through my visualization and goals. Then I do 100 burpees every morning. And, I've already had a very successful very productive morning. And when we're done with this call, I'm going to head to the gym and lift weights and come back and do another podcast and work the rest of the day. So, by the time some people are rolling out of bed, I've already had a lot of great wins. And I think that that is a huge part of any success that I achieve, is being able to have that good foundation. And, the lottery mindset, when somebody does come across a big sum of money, if you won a lottery, subconsciously that person they know they don't deserve it, and because they haven't worked for it. And that's where most lottery winners, in a matter of a couple of years, they end up filing for bankruptcy, because they haven't gone through the mental preparation, the consistency, and the I deserve this wealth to really maintain, hold it, and grow it. Some do, but very few do. Very, very few. So we just figured that, with the Mamba approach, which is my coaching company, that if you build the right type of person, then the success that comes after, you're not going to sabotage it, and you're going to stay consistent of it with the long run. And so we teach the who first. Who do you need to become? And then we teach the how to actually successfully invest. And that way they are in alignment the entire time.
And with like the insurance industry then, because like what I've seen, it can be fairly corrupt as well. And like my father passed last month, and my parents had been investing all their life. Like I remember from a young age, they were putting money away. And then like when I was kind of teenager, they kind of sent in two heavies to, oh, you must sign this. And it turns out he'll get €2,500 for something that they've been paying into. They basically just reduced it when there was a guaranteed sum at one stage. And also same with like pensions and everything. There's a lot of people, you're kind of encouraged, put in your money to your pension. Oh, it's going to be great. It's going to be great. And it ain't that good. My brother's wife was telling me that they had invested an investment plan, which sometimes is not necessarily insurance company, but just the industry. They put away the children's allowance for the whole 18 years. And instead they invested over €25,000. So it should, when you compound it and everything, you would be talking about minimum 50, probably closer to 100 with that kind of investment. They got $6,000 back. And that was in Holland. So like, it's a lot of people think they're putting the money away and they're going to be safer any day. I think you've kind of seen that, yeah.
It's the biggest scam in the insurance industry. So what ends up happening is, when there's a cash value building policy, what ends up happening is it takes 3 or 4 years for the insurance company to break even, because they have to pay underwriting costs, administrative fees, and they have to pay agent commissions, which is the biggest fee that insurance company incurs at the beginning. Because some insurance companies, deservedly so, they pay their people up to 100% commission. So that means if you're paying $300 a month and your annual premium's $3,600 a year, that entire first year of premiums a lot of times goes to the agent and the agency that wrote it. And so then about 3 years after a policy is written, then the actual insurance company starts to break even. When the insurance company breaks even is typically when cash value starts to accumulate. But then there's also a cap. So most IULs, they invest in the Russell 2000 or the S&P 500. And so when that ends up happening, like, the annual compounded growth of the S&P 500 is about 9% a year, roughly, over the last 100 years. 9 to 10, sometimes a little higher, sometimes a little lower. This is the thing, is there's some years where it compounds to 20 or 30%. But if the compounded growth reaches 12%, anything above and beyond that stays with the insurance company. So if there's a year where there's 20% growth, you only get 12% of the growth. The other 8% in 2021, when there was 30% S&P 500 returns, 28% returns, that means 12% goes to the insured and the other 16% goes to the insurance company. And then the sales point is they protect your wealth. So if the S&P is negative 1 year, you don't lose anything. But what real wealth comes from, like you said, is compounding. So if you have investments that compound, and the S&P index fund compounds quarterly, but there's no dividends, so it's not really an investment vehicle. They just say it because they invest your premiums, but not for you. It's all in the insurance company's name. So if there is any compounding going on, it's not being kicked back to the insured, it's staying with the insurance company. So not only are you capped at 12%, there's no compounding. So you don't get that Warren Buffett effect, that snowball that he talks about so often. And when I would explain this to people, I would always recommend, like, there's a couple IULs out there that actually perform well, but more likely than not they don't. And that's when, and also insurance works as a bell curve. So, if the insurance policy seems too good to be true and there's cash value incurred, typically cash value accumulates like this, and then it gets to the age where you become high risk, and then it starts to go down, all the while the insurance premiums remain the same. And once that cash value runs out, then what they do is they say, oh, there's no more cash to pay for your good policy, and then your policy rates hike up astronomically. And then it becomes what's called an annual and renewable term. And when that happens, usually you can't afford $800 a month, $1,500 a month for a $100,000, $200,000 policy anymore. You end up canceling it, not being covered anymore, and having no cash value left. So there are better alternatives to doing this rather than dumping all your money. And not only do most people that buy insurance policies don't understand how this works, most people that sell insurance policies don't know how to explain it because they don't even know how their own policies work. That was the advantage of me when I started working in the insurance industry at 22 in Nebraska, is I'm 41 now, and I still look pretty young. At least I like to tell myself I do. But when I was 22, I looked like a baby. So nobody took me serious. The only way I could get anybody to take me serious was just by studying my craft so well that people took me serious based on what I was saying. And then from there, I just learned so much that I was able to figure all this stuff out with the help of coaches, mentors, etc. And then I was able to explain and really dissect how the policies work. Some people that work in the industry for 20 years still can't explain it in a way that people can understand. So there's other alternatives. Are all bad? Absolutely not. There's insurance is very, very important. I encourage anybody to get it, but you want to know what you're getting into and not always just take the agent's word, because most agents that sell, they explain it on a piece of paper. They show you this, but you can't actually look at your policy until your policy is delivered to see the actual numbers. And then when your policy is delivered, usually it's in the mail because everything's remotely now. And what ends up happening is you have to try to dissect it yourself. I challenge anybody, even insurance agents, to dissect the policy. It's like reading Mandarin. It's very difficult.
And like, I know it's kind of different with the pensions, but like I remember, because I had full contribution when I was working in Ireland for a contractor, and with the annual reports that you get, they say if it goes up 8%, it'll be worth this. If it goes up 6%, every year they said the exact same. And every year was worth the exact, it didn't increase at all. And I was like, this is bad. But the other thing is, and I mean, I've talked to some people that were managing directors of massive companies, and they were the same. Like, they were kind of shocked at the returns. They were like, no, I expected this to be a lot better. But the thing is, with the pensions, like if say what the spouse dies, passes it on, so the wife then gets it, or the husband, whatever way it worked out. But then when they pass on, instead of it going to the children, not sure is it the same in the States, but usually it just disappears. As in, the pension company gets your money, which is scandalous.
Oh, for sure. 100%. It's called surviving spouse. But, there are clauses, and there are some great companies out there that allow it to continue to roll over, but many times they don't, and then it's just, it's kind of like gift cards. It's the same concept. Gift cards are some of the biggest scams you could ever get too. Because when, I hate to say that word so often, I kind of sound like a negative person, but trust me, I'm not. But, you buy $100 gift card from somebody, there's, what ends up happening is you buy $100, you give it to your friend goes to Amazon, and they either do one of two things. They only purchase something for $96, and that $4 goes unused. So that's free money for Amazon, or they use the full $100 and go a little bit over, and they end up using more than what that gift card is. So it's a win-win situation for Amazon, but it's usually a lose situation for the person receiving it or the person buying it. So, and it's a beautiful business model. So they either anticipate you spending more or less than what the card is worth. So either
or
way,
even
it's a win-win
losing it and not using it at all. I'd say there must be 15 to 20% of people that happens to.
Oh, for sure. My girlfriend, God bless her heart, she works at an insurance company, ironically, and they work with the Lloyd's of London, and they're always so generous in terms of giving birthday presents, anniversary presents to each other. And she opens up a shoebox one time. She got like 17 gift cards in there. Starbucks, Target, $5 here, $10 here. She's like, I should really spend these. I'm like, yeah, you got like $200 worth of gift cards there. It definitely should. But yeah, it's but at the same time, the businesses are just loving it every minute of it.
No.
But same thing, and there's a lot of insurance policies that go unchecked too. So insurance policies go unchecked. People don't pay their premium and their policy cancels and cash values left in there. Or people pass away and they don't have a will in place, or they don't have, any instructions from surviving family members to locate policies. And then some policies just end up not getting paid out. It happens with, crypto accounts too. Like somebody will transfer a crypto account to a cold wallet, a Web3 wallet, cold storage, and they won't tell any of their family that it exists. If something happens to them, there could be hundreds of thousands of dollars in there that is unaccounted for. So, it's very important to not only know how everything works, but to communicate what you have, or have it in a place where every single person within your trusted circle, like a beneficiary or, a spouse or really close relative, they know how to locate it and what to do. And that's a huge thing. A lot of crypto is just sitting there in cold wallets, untouched, because people didn't want to tell anybody about it because they're afraid people will steal it. So,
because I've actually discussed that with a few of the guests, and it's a shame, because if that happens, there's no way that you'd get the passphrase and kind of retrieve it. But at the same time, relationships break up. You can't trust, with my own experience, probably 90+% of solicitors. So what's your kind of ideal way of doing that, when the reality is, no, there's a high percentage of people that actually have a crypto wallet, and we should, because look, we could get hit in the morning with a bus. I'm optimistic like you. I want to live to 150, and I like going to the gym, and but we don't know what's going around in the morning. So what do you think was the safest way? Because at the end of the day, people are really trying to protect themselves that nobody shafts them, because unfortunately, when it comes to money, like everybody will, there's very few that you can truly trust.
Well, although I have good relationships with some major exchanges, our hedge fund, we use Coinbase Pro and we use Kraken, which are very trusted exchanges in the United States. However, they still are centralized exchanges. And the whole part of crypto is to go decentralized. So when we utilize, for myself, for any business that I have, centralized exchanges, those are typically, we keep money on there that is being traded and or money that we want to liquidate at any time. If we're having long-term holdings, what the most secure thing to do is to get it off a centralized exchange and get it into a Web3 wallet. Exodus is a great wallet to have because it's a multi-chain wallet. It supports 200 different blockchains on there, and it's very secure. From there, you can take it from a Web3 wallet, which is your seed phrase, and you can put it into a cold storage device. If you really want to get decentralized, you'd build a Bitcoin node, which I have, and you could put a Lightning node on top of that too, or a Lightning wallet. And a Bitcoin node, you can set security features that have security more strict than the Pentagon. It's insane. But one of the most effective things to do is kind of take what Vitalik Buterin does with Ethereum. Is if you really want to secure large sums of money, is you have a couple of trusted actors within your circle, maybe a mom, maybe a dad, maybe a childhood friend, maybe a wife, and not give the whole seed phrase to them. But if you have 12 words, 4 to one person, 4 to another, 4 to another person. So God forbid something were to happen, then they all three have to come together, but they don't know who they are. So I would have 4 go to somebody, I'd have 4 go to somebody else, and I'd have 4 go to somebody else. And they don't know each other are holding the keys to the wallet. So in the event that something happens to me, then you could, in your will, in your trust, or in your, final notes, you could say, these 3 people hold the keys, and then they could put that together to actually release the funds. That way there's no manipulation. They don't even know it exists until they all come together. And that's a great way to do it.
No, definitely. But in reality, you'd probably even have to have a kind of double amount of that, because if something happened, one of the 3, you're going to in trouble. So you'd need a kind of backup plan for them, because just in case some accident happened with one of the 3.
Oh yeah, it's just like a life insurance policy having a secondary beneficiary and a primary beneficiary. 100%. Most people won't go to that lengths to do that, especially if they're not dealing with millions and millions of dollars. And if that's the case, having a safe with a cold storage device in there, as well as your seed phrase, I'm not saying I do this, but it's something that your listeners might want to consider. There are notepads where you can have invisible ink specifically for crypto purposes, and you can have your seed phrase in there, and they can only be viewed by special lighting. So there's a lot of ways that you can secure your seed phrases that don't have the ability to be hacked digitally, whether it's through an email, through your own computer, your devices, or anything like that. So the best thing, everybody that's heavy in crypto should have a safe, a fireproof safe, and they should have things in there. And there's nothing wrong with having seed phrases in multiple locations too, as long as everything is very secure. But the most important thing is preparing for the inevitable. And this is just the life insurance guy in me, is if something happens, is there a way to access it? Because otherwise it's just going to lay dormant, like Satoshi Nakamoto's Bitcoin of millions for 14, 15 years at this point.
Brilliant. So you mentioned Bitcoin, but what is your full journey yourself? How did you start dabbling? Was it Bitcoin was your first thing, or what was your own kind of crypto journey yourself?
Yep, Bitcoin and Ethereum. So the funny thing is I started off by contacting Fidelity because I found out that they were doing cold storage for institutional clients. And they're like, "Are you an institution?" And I'm like, "What is that?" It was years ago. And they told me that there was a certain minimum to invest with them, that you had to be an institution or an RIA. And I wasn't any of those things. So I was like, okay, they're like, "Well, here's some information." So they sent me all the materials on Bitcoin. And the most effective way to learn it is I actually went by a glossary. So they had this like 5-page glossary of just terminology, and I just learned the terminology first. So after first 3 times I read it, I had no clue what I read. It was like reading a foreign language, but I just went through the terminology and I just started watching video after video. And I'm like Kobe Bryant, which is how the Mamba approach got named. Like Kobe Bryant, I'm just a very obsessive person. So when I like something, I really dig into it. So I just went all in. So I think the first exchange I ever got, I downloaded crypto.com as an app, and I purchased Bitcoin and I purchased Ethereum. And this was before a bull run happened, and it just kept going up. I thought I was smart, but it's just luck at that time. I didn't know how the cycles work. I just happened to time the market the right way, which usually doesn't happen. But then from there, I really started diving in and studying first, second, third generation blockchain. So first generation, as we know, is Bitcoin. So I studied how proof of work operated, how the nodes worked, how validators worked, how the miners were, how the algorithm is hard coded into its original code, and how the halving happens every 4 years. So when I first looked at Bitcoin, I looked at it as a money-making investment, because I knew supply and demand by default over time was going to cause the price of Bitcoin to go up. Because if the supply is decreasing year over year, every 4 years, but the demand remains constant or goes up over time, that's just going to cause the supply suffocation to force the price to go up. So for me, I was like, this is a no-brainer, especially if the Bitcoin blockchain is as secure as people think it is. And then I started studying SHA-256, which is the secure hash algorithm that protects the blockchain. So basically, an input goes into this compression, and then 256 ones and zeros get spit out on the back end. So if I were to say to somebody, guess between a 0 and a 1, the probability of you getting that guess right is 50%. And if they get that right, and I say, okay, now guess again 0, 1, the probability is reduced down to 25%. So every decimal you go over, the probability gets cut in half. So to be able to break a blockchain like that, you have a 2 to the 256 power of being able to do so. And Bitcoin runs what's called a double SHA-256, and it's never been hacked. So that means when the output is spit out from that compression, it goes through that shock function again. So it is just an astronomically, not impossible, but improbable blockchain to hack. So when I learned all this, then I started studying macroeconomics more deeply, learning how the central banks and the Federal Reserve just are printing money at will. So then it became not an investment to me. It became more of like a fair, monetary, transparent system that could benefit the entire world. And, just a way for the world to kind of reset itself, kind of like Tyler Durden in Fight Club when they reset and they blow up all the credit card buildings in Miami. Not saying that that's ever okay, But it was just a way to kind of even the playing field, because the financial system is controlled by a small group of people worldwide. And the people that benefit are the people that are in the club. So from there, then I went into second generation and really studied Ethereum, found out how smart contracts worked, learned how you can build decentralized applications on top of their blockchain. So instead of a monetary system or a store of value, Ethereum's more of a general purpose blockchain where it actually has more real life functionality. So if I buy a case of wine from Italy, through the logistics of the blockchain, if let's say a decentralized application, their whole goal is to trace the logistics of all products worldwide. And I can look on the blockchain and say, okay, is this Italian red wine actually from Italy? Oh, let's look on the blockchain. It was sourced here. The grapes were picked here. It was bottled in Tuscany. It was shipped from here to here. And then it came to this store. Ralph's is a big grocery store in LA. And then I purchased it from Ralph's, picked it up, and I can see through total transparency through the blockchain that it was actually a real Italian red wine. And this can also help eliminate, forged products, whether it's a Rolex watch, a Louis Vuitton purse or bag. So if they actually put their logistics on a blockchain, they can see exactly where it's sourced. Now, some companies that might not have, the ethics might not want to do that because they, maybe they're using unfair labor laws, or it's not using the authentic ingredients or materials that they say it is. And so it doesn't solve everything, but it solves a lot of the issues of lack of trust and transparency that the world really sees these days. So, and then you got to third generation, and third generation, what they just try to do is improve on the systems of the first and the second. So a huge issue with first and second generation blockchain is the transactions per second is somewhat low compared to like a Visa or a MasterCard. So the throughput, it's like bottlenecking. It's like being on a 5-lane highway and kind of going down to 2. That's where traffic jams happen. So that is an issue which causes a scalability issue. And another thing is proof of work uses a lot of computational energy. So when you go to proof of stake in the third generation of blockchain, it uses less energy, which is supposedly better for the environment. And also you can have and process more transactions per second. So it's more scalable. But the thing is with that comes less decentralization and also higher risk of it failing. So it's like, what is the more important thing? To have more transactions per second and use less computational energy, or to have a secure blockchain that uses less transactions per second, has more computational energy, but has never been hacked? It'd be like storing all your wealth in a vault and you have a bunch of Navy SEALs with armed rifles, as opposed to a 10-year-old kid that's a security guard, saying, "Oh, don't go in there." So it's there's a trade-off, and what every investor has to decide is it worth the trade-off? It may be, it may not be. Time will tell.
And just on the mining and the energy use, I mean, I've kind of discussed that they're actually using that for even heating and everything. There's a lot of secondary things that could be used with the mining, that it's not just wasted energy as some people are kind of claiming it to be.
Oh yeah, for sure. I mean, it's energy that's already on the grid anyway, and energy is one of the most important commodities in the world, if not the most important commodity. So most of the time when energy is expended, it's end up wasted. Even solar, there's a half-life to solar. So solar is created, for example, in California, solar is basically created and the energy is sent from Las Vegas over to over to the houses. And that's how energy is stored. I mean, electricity is created in Vegas and it's sent to California. With solar, you have all this energy that's stored, but it dissipates over time. There's a half-life. Eventually it's gone. The good thing about the energy that Bitcoin uses is it's storing energy that's becoming more valuable over time, because money is just energy, and Bitcoin is digital energy. So if you are mining, yes, you're using energy, but that energy becomes more valuable over time because it's a deflationary asset. If I build a house right now, I'm going to utilize energy, I'm going to have time, but that house will get more, it might go up in value, but the actual foundation of the house will deteriorate. So that's a good thing with digital energy. If it's deflationary, if it holds its value, $100 million spent in Bitcoin mining today could produce $100 billion worth of value in the next 20 years.
Excellent. No, perfect. And like you came from kind of highly regulated industry. What you're doing now is regulated as well. What's your thoughts on regulation for the crypto blockchain technology?
I'm torn in a sense that I do not want to ever see a CBDC. And, not to get political on your podcast, but if you ever see a candidate in any political party push for a central bank digital currency, run the other way, because that is simply just going to socialize and provide like kind of a communist environment for digital assets because they can control everything you can do. They can say, I don't want you to spend money here. Let's block your wallet. That's why decentralization is very important. So a part of me, the investment part of me, loves that if regulation happens, or at least some clarity, that's going to have more sovereign wealth funds come into the space, which will drive up the case of Bitcoin. And also it might provide more or less fear for the average retail investor to start investing into it as well. But at the same time, it's like a fire. It can't be stopped. The best time to put out a fire is at the beginning. But a fire gets so big, eventually there's not enough water in the world to put it out. So with Bitcoin, it's gotten to the point where it's so decentralized and it's grown so big that, even if regulators wanted to stop it, it's a worldwide network now. So it might, just like when China shut down mining in 2021, all the mining just went from China and it came to the United States and went to Kazakhstan, and it didn't skip a beat. So regulation could provide short-term stability to the market, but I think in the long term it doesn't really matter because it's an unstoppable force at this point. So I like to see some clarity just to kind of dissipate the fear in the market. But at the same time, that kind of goes against the Bitcoin maximalist, like, I want to separate from the government in terms of I don't want them to have control over it. So I'm a little torn, but essentially I think it's a good thing just for clarity purposes.
Brilliant. And like with the way the market goes, like we mentioned at the start the mindset. You might kind of touch on that because I presume with the coaching as well, you kind of touch, you discuss that with your clients. But I think it's important that because a lot of the times people are kind of watching what's going on in the news and that's how they base their decisions, which is obviously the wrong way. But like, how would you kind of guide people in the mindset?
Yeah. The mindset for first thing is that the two most important things when investing is to the best way to create a solid mindset is to work out, exercise every single day, move around every single day. Because if you build a consistent habit of moving your body through weightlifting, walking, running, boxing, whatever the case may be, you're going to release endorphins. You're going to become better looking. You're going to feel more confident with yourself. And with that confidence and with that habitual consistency, it's going to have a natural spillover into Bitcoin. So you work on building the body, you work on feeding the body healthy foods. Don't pig out, make sure that you're in a calorie deficit. If you're trying to lose some weight, make sure your macronutrients are on point in terms of what your goals are. We teach all of that. So, and then with that consistency, we lead people into a self-study program. So we build the foundation. So I believe that if you understand how something works, you're more likely to stick with it for the long term. So even just that brief explanation on first, second, third generation blockchain, it's important for people to know and not just go by faith. Don't just invest in Bitcoin because Roy's doing it or Corey's doing it. Invest in Bitcoin because you understand the basic foundation of what the goal is in the long term. And then that way you understand that it's not a 1 year investment, 6-month investment, 2-year investment. This is a 5, 10, 20, 50-year investment, depending on how old you are. The last of the Bitcoin is set to be mined in the year 2140. So we have 117 years of Bitcoin mining left. So you can't tell me, nobody could tell me that the price isn't going to be significantly higher in 10 years, just based on that alone. So once you understand the foundation and you understand and you're in the right mindset through reading, exercising, and eating healthy, and also surrounding yourself with a community of people that are like-minded. If you try to do it alone, it's very difficult to stay the course. If you have somebody to hold you accountable, your mindset starts to change and you start to adopt the habits of the people you're surrounding yourself with. But then we move into asset allocation. So depending on what your income is, depending on what you're financially capable of doing, we set up an asset allocation plan where no matter what, on the same day of every week, you're going to create a wire transfer or a bank transfer to a crypto exchange of this amount of dollars, whether it's $100 a week, whether it's $500 a week, depending on what your income is, whether it's 50 or 10, the amount doesn't matter. It's important that you just start. If you start too high and you have to scale back, it's kind of it hits that confidence and hits that ego. So it's actually better to start small and build upon a smaller foundation. So if you're struggling financially and you can only afford $50 per week, start with that. And then maybe after a couple months, bump it to 55. After a couple months, bump it to 60. And then slowly and incrementally, as your pay increases, as you become better at managing your own money because of that consistency, you can start to increase in more and more over time. So that's the first step of asset allocation, is committing to a plan and never deviating for it. The second step is deciding what that money is going to do. So typically, we teach people AI, high frequency trading. So we use AI platforms and algorithms that do high frequency trades that spit off profits in either US dollars or in Bitcoin. So that's one of the strategies we use. But let's say you don't do that and you're a beginner. Let's say you do $100 per week. You might want to take $60 of that, invest it in Bitcoin. You might want to take $30 of that, invest it in Ethereum, and you might want to take $10 of that and invest it in what we call altcoins. These are smaller cap coins that might have the potential to have big gains in the future. But you want to weight it where Bitcoin and Ethereum are most likely your main long-term holdings, because those are the two cryptos that have stood the test of time for the last 10 years, 15 years, et cetera. And then from there, you can learn how to invest in moonshots, like through decentralized applications such as Uniswap. And you can start to branch out, but starting with a very simple foundation of asset allocation is how to really get the ball rolling. And then from there, you can add AI, you could add moonshots, yield farming, staking, all that kind of comes later. But it's just creating that consistency, because if you do that week after week, month after month, year after year, nobody could convince me in 10 years that you wouldn't have a significant amount of wealth built.
Yeah, brilliant. And like with pivotal point capital, that's basically ye then kind of doing that for people, rather than, because obviously you're teaching people how to do it, but not everybody would be comfortable doing that. Is that what, am I correct in that's like?
That's exactly correct. Yeah, that my hedge fund, it gives people an opportunity that don't want to learn it to invest, and we handle everything. And then the coaching company is for people, maybe, because there's minimum investments amount in my hedge fund. So maybe somebody doesn't have the funds to invest large amounts of capital, but they do want to get started and they want to learn it on their own. That's the alternative, is teaching them through the Mamba approach, how to build that foundation, how to start to build your own crypto portfolio. In my Instagram, it says, I teach people how to build 7-figure crypto portfolios. But then underneath it says mind and body first. Because I do think that's very important, because I've taught people and then they quit. And I'm like, why do they quit? Oh, it's because they didn't have the traits needed to stick through it, because they didn't see the long-term vision. So you have to also be able to visualize where your portfolio is going to be in 5 years, in 10 years, and 15 years too. And being able to go through visualization techniques to be able to know what you're saving for, what you're investing for, is extremely important. Because if you're just doing it to do it, it's like going into the gym to go to the gym. Anybody that goes to the gym that has a goal and a plan, you're 99% more likely to hit it than somebody that's going in there and winging it.
Brilliant. And like when you do this, because I know that some kind of industries in America are based on the city that you're in. Is the hedge fund, is that kind of all of America, or is it international, or is it just based on LA?
It's all 50 states. It's a nationwide hedge fund. What we do is when somebody invests in the fund from a new state, we have to file with that state. There's blue sky laws that you have to abide by. And I think after this year, because we just started working with institutions and family offices. So big institutions are starting to invest with us now. We have broker dealers and interbroker dealers and agreements that are working with us. And our next step after that is to go international, is to be able to work with people in Europe, Switzerland, Cayman, et cetera. And I think that's going to be a 2024 goal. We're looking to do that before the next halving, which is scheduled to be in April of 2024. That's when the Bitcoin rewards that miners receive gets cut in half. So usually after that event happens, about a year after that is when we experience that bull run. So we're looking to get international capabilities through our, our lawyers handle all of that. So once we get that, then if we can time that before the bull run, it could be a great opportunity, not just for people in the States, for anybody listening worldwide.
And I know we talked about pensions earlier. Are pensions allowed to be put into the hedge fund?
Absolutely. Yeah. So that's part of the institutions that we're working with. So, when you're working with institutional investors, that could be pensions, nonprofit organizations, family offices, multifamily offices.
Okay. And just for kind of traceability then, because at the start we were talking about all the fraud, how does the person know that when they're investing in your hedge fund that, like that if it's gone up X amount, like, because I know you with your fee structure, you're actually showing it. And I believe, is it a 20% then on profit or something like that, that you like a 2% operation?
It's a 2 and 20 with a hurdle rate. So that means before any performance fees are taken by Pivotal Point Capital, our investment has to perform. So it's a 2% quarterly hurdle rate, which equates to roughly 8% per year. So that means if we don't perform at 8% or higher, then there's no performance fees that are taken out. So we have to beat the annual rate of inflation, roughly the S&P 500, before we even make any money. So what we do, though, is we work with a fund administrator, international fund administrator called NAV Consulting. Their headquarters in Chicago. So, what NAV does is they have the private keys. They have the keys to our wallets. They have the API integration and keys to our exchanges. So they track every penny of movement within the entire fund. So we can't even initiate a wire transfer into any of the exchanges or wallets without their permission. So it's like a multi-sig wallet in the sense that you need 3 authorizations just to move money around. So that means, you've heard of the terrible hedge fund stories where people just take off with billions of dollars. So what NAV does is it prevents that from happening, because we can't move any money without them authorizing it. And they have destination locations of where the money goes, where they can see everything. And that requires my authorization, my partner's authorization, as well as their authorization. So that's one thing. And then also we get reports that are sent monthly. And these reports show the performance of the fund. We're up over 20% this year, which for an investment fund is extraordinary. We're up over 20%. We do monthly reports, and we have breakdowns of the assets and what each asset is doing and performing as well. And all these reports are generated by NAV, sent to each investor as the numbers are finalized.
Brilliant. So I know you're an author. Is it, because I found one of the books was investing in the insurance industry. Is it 2 books that you've written?
I've written a second book. I haven't published it yet.
Okay.
So I'm working on editing it right now. But actually, the Investing in Insurance Made Easy, I'm doing a 2023 edition as we speak, which is going to be released by the end of July. So it's going to be updated with how, my career has progressed over the last few years when I wrote it, as well as, the market conditions that have changed. And we're going to institute a lot more of the digital assets in there. But it's a great way. A lot of the stuff that I explained with life insurance is in the book as well. Not only that, the history of life insurance, how it works, examples of policies, and then we get into equity investing, how to calculate intrinsic value. But we're going to, modify a few things in there, make sure that we focus a little more on digital assets, especially since that's taken such a front seat in my business recently, and really just expand on the base information that we had. So anybody can look towards the end of July, beginning of August. And, my goal is to have it out on my birthday, which is August 2nd, and, have it all edited and done. So it's just a few tweaks we're going to make. But just want to make sure it provides as much value as possible to everybody.
Brilliant. And to be honest with you, just based on our conversation, I think you have a fantastic way of explaining and simplifying things, because like I read a load of books at the start and it was so complex. I didn't invest because of that. And I just know by the way that you've explained a few things that is critical to people actually embracing this technology.
Yeah, I agree. I attended a seminar when I was 20 years old, and by all means, this has nothing to do with all teachers, but this gentleman told me that teachers, many teachers, not all, but many teachers will take a very simple topic and they'll complicate it, and it's difficult to understand. But a communicator takes a complex topic and they simplify it, making it easy to understand. So I've always strived to take a complex topic and then be able to break it down in analogies where it's easier for people to understand. Take Ethereum as an example, and I'm sure you're familiar with the Ethereum blockchain in a sense. Ethereum's second generation blockchain, and the analogy that I always give everybody to have it be easily understood is, there's a huge mall in the United States. It's called Westfield Mall. It's actually a worldwide mall, but it's very popular here. So what Westfield does is they go buy a humongous property and they build a building. And then within that building are stores that businesses can come rent out. So the Westfield Mall is basically the Ethereum blockchain in a sense that it's general purpose. So if Ethereum builds their blockchain, other decentralized applications, which are the same thing as any business that wants to open a store in a mall, a decentralized application such as that logistics example that I gave you earlier can build on top of Ethereum. And they have to abide by certain rules. There's what's called gas fees that they have to use, which is similar to a business paying rent on the Westfield Mall. But that's essentially what it is. The only difference is when a crypto project builds on Ethereum, they can create their own currency within that ecosystem. So I used to work at Gold's Gym, which was actually on a Westfield Mall property. So that would be the equivalent of, yes, Gold's Gym has built on Westfield. And in order to transact and do business within Gold's Gym, you have to use Gold's Gym currency. Let's call it Gold's Gym bucks. And that's what ERC20 tokens are, or crypto projects that are built on Ethereum. So those are their own crypto that's built on top of another crypto. And that's essentially what the Ethereum is they just built a general purpose blockchain. And through the utilization of a smart contract, other projects can build on top of it and create their own ecosystem that's built on top of that foundation, similar to a store that opens up within a mall.
I love it. That is fantastic.
Yeah. If you understood that, I mean,
yeah,
and
no,
that reduces
brilliant.
the complication.
Absolutely. And just finally, because I love kind of touching on social media for different people. I mean, obviously building, your platform and just everything, well, in the crypto world, people are using Twitter and Discord and everything. Just kind of what you find is excites you and serves you best.
Yeah, absolutely. I fell in the Discord, Twitter, and Telegram rabbit hole, and I actually don't do that anymore. So I upset a lot of people because they'll communicate with me through those channels, and I think it's just a lot of noise. So if you're in Telegram day in, day out, to me it's about action, not about typing. It's about action. So I would much rather watch a YouTube video, read a book on the foundations of crypto, or maybe some of the latest news, than hear 10,000 opinions on Twitter, Discord, or Telegram of people that don't know what they're talking about. So what I have those channels. We have Capital Pivotal for Twitter. But we do some updates on there for our hedge fund. But for me personally, Instagram, my Instagram channel is at cm.carbone with an E at the end of Carbone. And I focus on crypto, but fitness, mindset, the whole thing, the whole spectrum is important. And I think the more you get into Twitter, the more you get, I love Twitter, I love Elon Musk, but the more you get into Telegram and Discord, you can just find yourself 6 hours later arguing with somebody or celebrating the potential of a project that hasn't even hit its potential yet. And then it's like, okay, during that 6 hours, I could have done 10 other things that it could have moved my life forward much faster. So it's I love the community that it builds sometimes, but I think that most of the time it hinders somebody's success to move forward. I would much rather talk in a form like this and have our message be conveyed to thousands, tens of thousands, hundreds of thousands of people, rather than post my opinion, because the tonality of your post on Discord or Telegram is not going, it can be misconstrued. And then all of a sudden you're in a Twitter Telegram war with somebody and you're like, no, that's not what I meant. And it's a weird situation. Plus, a lot of social media has gotten people too comfortable for saying things without the consequence of getting punched in the mouth. So I'd rather just, face to face it. I'd rather put out my own videos. I'd rather follow people that I admire take the information, and then run with it. I'm an action guy. And I think people that are in crypto are so like this, and they're not enough action.
Absolutely 100% agree with you. And I love what you just
Mm-hmm.
said. So listen, Corey, thoroughly enjoyed our conversation. You might let people know how they can find you.
So I appreciate it too, Roy. You're awesome guy. Thank you so much. You can find me on Instagram. My handle is at cm.carbone. So cm dot and then carbone is CARBONE. You can find me on LinkedIn. You can just search my name, Corey, COREY, and then Carbone, CARBON. Or you can find me on YouTube. We just launched the YouTube channel, and it's youtube.com/at the Mamba approach. Very simple.
No, brilliant. So I'll make sure I'll put the links both on the audio and the video. And just
Perfect.
for those listening as well, this is going to go out. Obviously, this is the crypto podcast, but I'm going to put it out on the Awakening as well, because I think what we've touched on from the start all the way through, because it's so critical, it affects everybody. So I'll make sure that it goes on that. So you'll find everything on bio.link/podcaster. Sure to give us a thumbs up, 5-star rating, share with your friends. And when you get Corey's book, you know it's going to be his birthday. Do him a favor, give him a 5-star rating, and share with your friends. It
I would
helps.
love it. Yes. Thank you so much, Roy.
Yeah, no problem. Next week, take care.